Now, talk about JK Cement. We've got Bidkar Sudhir, the CFO at JK Lakshmi, joining in on the show right now. Mr. Sudhir, great to have you in ET now. Thank you for taking the time out. FY25 was as tough a quarter, or rather, the first quarter was as tough on a sequential basis as last time when we spoke with you. You did suggest that Q1 demand was impacted by elections, but demand was expected to pick up in the June month after the elections. Has the pickup in demand so far lived up to your expectations? And do you then think that you can deliver better in the next quarter?
Thank you and good morning. We were expecting the demand to pick up from only October because current quarter being a monsoon impacted quarter, we don't see that demand picking up considerably. But it may be marginally better than the first quarter. But we are quite hopeful from third quarter, which is second half, the demand should definitely pick up and we should be able to deliver better numbers going forward in the third and fourth quarters.
Maintaining your volume growth guidance of 10 to 12% for FY25?
No, we don't say that it will be 10 to 15% volume growth. We expect it to be in line with the industry. Industry is expected to go by 6 to 7%, and we would be maybe marginally shade better than the industry growth and should clock about 7 to 8%.
7 to 8% for FY25 is what we're expecting in terms of the guidance. But, could you just talk a bit more about in terms of volumes, one, then the 10 to 12%, when will that come in? Is next year something looking like a possibility? And in terms of cement prices also, we're seeing a continued downtrend there. So what is the expectation for the second half of the year? And how are we looking at it in terms of the pricing there?
Pricing, as you rightly said, have been subdued in the first 4 months of the current financial year. We expect with this upsurge in the demand from October post the Navratras, we should have the pickup in demand and also the better pricing. And volume guidance, I would say next year we can clock FY26 could be the year in which we can clock a double-digit growth.
So next year maybe is something at a double-digit growth in terms of volumes. Pricing also, we'll keep an eye out on that one. Okay, now in Q1, could you just talk to us about what is it looking like in terms of EBITDA per ton? The guidance that you've given was of around 1,000 rupees per ton plus for FY25. Is that something that you will still be maintaining, or how is that moving?
First quarter, we were able to clock 770 rupees EBITDA per ton, which was broadly in line with the average of the industry. And going forward with the second half, the pricing as well as the demand expected to grow. In the third and fourth quarter, we may end up to about 1,000 rupees EBITDA per ton. That is our target going forward.
Fourth quarter is where you are expecting 1,000 per ton. So on average, maybe then for FY25, that would be a bit lower, right? The guidance other than 1,000.
Maybe. Okay. You're right.
Okay. And just in terms of capex also, how much will you be looking at in terms of capacity to increase over the next 3 years? What is the plan there, and how much of it will be funded through debt?
We have in the pipeline capacity increase of about 4.5 million tons of cement going forward over the next 3 years. It will be primarily in the eastern region with the grinding unit at Durg, Bihar, and UP and Jharkhand. And together with that, we have recently done an acquisition in Northeast. So in 3 years' time, we expect the production from that also, maybe about 1.5 million tons. So maybe 6 million tons going forward over a period of 3 years from now.
Just are a bit concerned that you are expanding quite a bit within the overall eastern region, which is already rather overcrowded. We have a lot of players who are there. How would you counter this view? Are you not worried? What's the game plan to retain or grow market share?
There, the demand is very good. And going forward, we expect the incremental demand to outpace the incremental supplies. In this quarter also, our eastern plant has performed better than the northern plant. So going forward, we don't see that to be an issue so long as the demand is there.
I wanted to finally just quickly get in a take from you. Then you've also approved the merger of several subsidiaries, which includes Udaipur Cement Works. What is the rationale of this and how is it going to bolster your financials?
Basically, the rationale was because today, at this point of time, the capacities in JK Lakshmi were fragmented with Udaipur, Mansdeep also having some mines, and Hydra was also having some land. So consolidation will also always help. It will be in the interest of the shareholders. It will provide opportunity for shareholders to unlock their values. Going forward, there will be huge synergical benefits and the capacity coming in a single company would obviously give a better multiple to the investors going forward. So that was basically in the interest of the shareholders, we have done that.
Thank you for being clear about that and giving us a sense as to how your business is likely to shape up. That's the view coming in from the management of JK Lakshmi Cement.